It's that time of year again, year ends and tax return season. So why do we actually have year ends? Because let's have a look at a set of books. I'm going to create a set of books. I'm going to copy an existing set of books, and I'm going to browse into my TurboCASH 5 directory and look for bin tutorials, English tutorials, and Handyman B. And I'm going to use this because I know there's some data inside there. And I'll call this year end handy. So right, I've opened, if you look down the bottom here, I've opened a year end handy, and I can now go and look in the setup at reporting dates. So this shows me, and this is very typical of all of TurboCASH sets of books, that there's 12 periods. It's configurable. You could make it 1, 3, 5, but we make it 12 in 98% of the cases, 99. I can't really remember anyone that ever wanted a difference. So it's 12 periods, which are basically the months in the year, and then the starting date, which is the 1st of March. Therefore, the ending date is 28th February 2018. So let's just say we come now to the 1st of March 2018, and that's after this particular financial year. And if you try to make an invoice or enter a date, TurboCASH will give you an error. So what's good about this is that you have in TurboCASH a system that can handle 2 years, 12 months of this year's data, 12 months of last year's data. Now what the year-end process does for us is it moves the transactions from this year into last year, and it takes all our income and expense accounts and consolidates them into the retained earnings account. Let's just have a look at that in detail. So in this handyman example, this is my income statement. I like this T-Ledger analyzer, but it's got 3 reports, trial balance, well, a few more, so actually trial balance, income statement, and balance sheet, which are relevant to us. So let's look at first our income statement. And this shows me that at sales of 17,000, cost of sales of 5, that gave us 13,000, and here were some expenses, and we would have made a profit of the sales minus the expenses, giving us a profit of 9,845. So when we come to the end of this financial year, we're going to transfer this profit of 9,845 into a retained earnings account, and we're going to move everything else forward. So let's have a look at that. This is now the balance sheet. And if you look in my balance sheet, you can see that I have capital of 5 from the previous year, and I've got these liabilities, and I have these assets, and the assets minus the liabilities is the capital from the accounting equation. So the balance is 9,845, which is the amount that's going to be going into the retained earnings account. Right, so let's just have a recap of this. If I look at this in the accounts utility, which is program to look. This is what a chart of accounts looks like for this particular handyman. It's got my income and expense accounts, which are sales, cost of sales, bank charges, and here come the expenses. And then I come to my first account, which is my capital account, and then my key one, my retained income account. Now what it's going to do at the year end is take all of these, add them together, which is the 13,000 minus the 3,000, and come up with the 9,800, and it's going to transfer the 9,800 from this account into the retained income and make these all zero again. So when I start my next financial year, my sales will start, instead of being at 13,000, will start again at 0. These accounts here, the balance sheet items such as my liabilities and my assets, bank account, cash, the stock account, these all retain their value. They're not changed, they carry their balances through. Let's have a look at that in action. So remember that in my setup, my reporting dates are finishing on the 28th of February 2018. I'll go and try and make, for example, now a invoice, a new invoice, and I'll make it to Mark Davies, and I'm going to make it on the date the 1st of March 2018. Doesn't really matter what I put in here. Okay, and it tells me this error, the period is closed for posting. And that's right, because my year end is the 28th of February. I'm trying to make an invoice in the 1st of March. So for example, now I have my set of books handyman up to the 28th of February. I'm going to copy another, I'm going to create a new set of books. I'm going to copy and I'm going to copy the test handyman, the year end handy, and I'm going to call him year end handy 19, because it's going to be to the year 2019 and finished. And I've created now a new set of books called year end handy 19, and on these set of books I'm now going to run the global processes do year end. Continue, yes. No, I don't wish to cancel the process. Now what it's doing is processing through my expense accounts, and it's done it. So if I come and have a look at the setup here, and I look at the reporting dates now, this is in handy 19. You can see now that the set of books is now finishing on reporting dates 2/28/2019. And what will have happened is the transactions from this year would have been put through into last year. So let's have a look at the report. Look at my income statement for the period 27 to 2018, that's last year. That gives me the correct figures as I had previously. And if I look at my new income from the 1st of 2018 to 2019 for the year, my sales are naught. So my income and expenditure accounts have been reduced to 0. And my balance sheet item on the date of 20 to 19, we'll look at that whole year. Include opening balances. Report again. And my opening balances have been carried through into the following year for the reporting. Right, so that's it. Year-end process. Get it done. Keep your tax up to date. And everything's going to be okay.